Welcome back everyone to another Only Growth video. I've been getting a lot of private messages about the TFSA. So today's video I'll be going over and breaking down my favorite Canadian account, the TFSA. The TFSA is an account in Canada where you can hold any security such as stocks, mutual funds, ETFs, bonds, etc. You would be surprised at how many Canadians don't understand and know the full benefits of the TFSA. There are many videos on YouTube, but in this video, I will keep it simple and short for everyone to understand. So let's get to it. What is a TFSA? First of all, the TFSA stands for Tax-Free Savings Account. The TFSA account was brought into Canada in 2009 to help Canadians to save or invest for the individual's future. For myself, the future I want to have is a tax-free income to pay for my living needs. An example is like a cell phone, utility, food, car, rent, etc. The benefits of a TFSA. The main benefit of a TFSA is that it is a tax shelter plan. Before you ask what is a tax shelter plan is, when opening or having a TFSA account, anything within this account, the income and capital gain will be tax-free, so it is sheltered from tax. Example number 1. If buying a stock or ETF on a Canadian stock exchange, and let's say it is growing. So if your security is growing in this account and you decide to sell, you don't pay taxes on capital gains. It is sheltered from tax. Example 2. Let's say the security you own in this account, let's say a Canadian stock, and the stock you own pays a dividend. Dividends may be paid monthly, quarterly, semi, or annually. Not all stocks pays a dividend, so just do your research before buying. I like to use Yahoo Finance or Dividend Channel to help me with my stocks and ETFs. So let's get back to example 2. Say the stock you own pays a dividend. That stock and that dividend is tax-free. Again, it's sheltered from tax. Important note, if purchased on an American stock exchange, the dividend are subjected to a 15% withholding tax, which to me, it's very minor, but a lot of people just don't know or understand. Here is an example. So say if you bought 16 shares of Apple, which is on the NASDAQ stock exchange. So it is subject to a 15% withholding tax. The 15% withholding tax on a dividend is automatically taken out when the dividend is paid to you. You don't have to worry about taxes at the end of the year because there is no taxes in a TFSA account. This 15% goes to the RIS, so the Americans want their taxes. So let's get back to Apple. Say you own 16 shares of Apple. You are subjected to 15% withholding tax. So Apple's dividend to today's date is 20.5 cents every quarter. So you take 16 shares times 20.5 cents equals $3.28 US. Now we got to take the 15% withholding taxes out. So you are left with $2.78 and 8/10 cent US. That is what you will receive when the dividend is paid to you. Note 1. Depends on your broker. Watch out for the currency exchange fees. The broker I use is Questrade because it has low fees instead of Canadian banks or other brokers. Note 2. Any capital gains in a US stock will be tax-free in a TFSA account. The 15% withholding tax is only for the dividends. Note 3. Before buying American stocks or ETFs, make sure it is allowed in the TFSA account. Some stocks and ETFs are not allowed into a TFSA. A simple search on Google can answer these questions. Most brokers, if you can't buy them into a TFSA account, they won't let you buy them. Opening a TFSA account. You have to be 18 years old to open up a TFSA account, depending on the province you live in. Some are 19, such as BC, Newfoundland, Nova Scotia, and New Brunswick. These provinces that will let you open up when you are 19, you still can accumulate the TFSA room at the age of 18. You are just not eligible to open up the TFSA account until you are 19. Note: you can open up multiple TFSA accounts, but just remember you still can't over-contribute the limits to the year you are born. Contribution limit. Once legal of the age of 18 or 19, depending on your province, you are only allowed a max limit depending on the year you are born. Here is a picture of the contribution limits per year. So an example, if I turn 18 in 2015, my limits for 2021 is $41,000. That is my contribution limit. If money is grown into the TFSA account, it don't count as contribution limit. An example, if I put $5,000 as my initial and it doubled, so now I have $10,000 into my account, the total contribution limit is still $5,000. It can also work against you. Say if your initial is $10,000 and it went down to $5,000. Your total contribution limit is still $10,000. So if you sold, that means you would lose $5,000 of contribution limit. So please invest wisely. In your TFSA account, you cannot use capital loss to offset the gains. That is only in a margin account. For max contribution limit, you had to be 18 in 2009 or earlier to get the full $75,500 contribution limit. If you never contributed to a TFSA before or haven't invested the maximum amount when turning 18, you can carry forward unused amounts. It is very smart to diverse your portfolio and do your due diligence on anything you invest in. This is an important warning. Do not over-contribute your TFSA. You will be penalized and pay a tax equal to 1% of the highest excess amount per month. It is important to keep track of your initial investments. If you over-contribute, you need to take out the over amount as soon as possible. An example, say you over-contributed at $10,000. 1% fee per month equals $100 every month, which is $1,200 a year. Don't over-contribute. Here's a good tip. From my experience, I always keep track of my initial investments. Some like to rely on the CRA website, but it isn't always updated and it isn't always correct. It is important for you to track your own initials in your TFSA account. The TFSA withdraws. Withdrawals can be made at any time, and of course, it is tax-free. An example is, say you put in $5,000 and it doubled to $10,000, and if you decide to take all that money out, you don't have to pay taxes on it. It is tax-free. It is important to know the money you withdraw out of a TFSA, because once you take that money out, you have to wait until next year to put that money back in, which is January 1st, 2022. Plus, within 2022, you can take the new contribution for that year. An example. So if I was born in 2015 and I have my max TFSA, which is $41,000, if I decide to take out $20,000, I have to wait until January 1st to put that $20,000 back in. Soon as it's January 1st, 2022, I could put that $20,000 in plus the contribution limit of that year. Before I clue up in this video, I just wanted to say I hope you all enjoyed this quick breakdown of the TFSA account. Make sure to sub, like, and share. Just one more thing I wanted to mention about the TFSA account. It is meant for a long-term investing account, and wanted to make sure that day traders beware. High frequency trading raises alarm bells. The CRA conducts random audits catching and abusing the benefits of the TFSA account by making quick profits by buying and selling securities. If you are buying and holding for months and years and you decide to sell, there shouldn't be any problems. But if you are day trading every day, quickly buying and selling days at a time, this is considered carrying on business and the TFSA will be taxed. The CRA has very vague rules about the TFSA account, but if they suspect you generating business and not for investment income, they will flag your TFSA and it will be taxed. Well, that's all for today's video. I hope you enjoy. Please again, like, sub, and share to keep watching my journey. Stay safe, invest smart, and I will see you on my next video. Take care.